Palantir, there it is. Palantir, front page of CNBC. Palantir stock jumps 19% as AI demand drives revenue beat. Always a good thing when one of your stocks is on the front page of CNBC and it's about something good, okay? So we have some things to get into in today's video in regards to Palantir stock. Obviously, the stock's exploding higher. After hours is up over 17 percentage points. We're going to get into the numbers. And you know, when we go into the numbers, we go into the nitty gritty. We're going deep in the numbers. I got some very important things to show you guys that I think a lot of people are missing in regards to numbers, okay? Then we're going to do a huge development in regards to the business model, that it's a fundamental change outside of just the boot camps, okay? And we'll speak about that in this video. And then the last thing we'll get into is my thoughts on buying or selling the stock in this video, okay? I appreciate you guys joining me. Only thing I ask in return is that you smash that like button. You make sure you're subscribed to the channel. That's it. That's it. Like, subscribe. Let's go, guys, okay? By the way, just so you're aware, Wednesday I will be doing PayPal's earnings live stream on Twitch. So, you know, mark that in your phones if you care to join me for that. If you care at all about PayPal stock, put it in your phone now. Put it on a Post-it note. Put it on your head. I'm doing a big live stream on Wednesday. I will be live streaming the earnings and the conference call, as I just did with Palantir here today, which at the peak, I think we had 1,200 viewers on for the Palantir, which is a pretty good number for Twitch, okay? All right, guys, so let's start going through this. Palantir stock pops on unwarranted optimism. Avoid. Now, I thought I would just show you this to start out the video, because at the end of this video here today, we're going to come back to this. And we're going to talk about, is the pop in the stock price after hours, 17%, however much it's up tomorrow, is it really unwarranted? Should you avoid the stock or not, right? After beating a relatively small top line beat, Palantir stocks jumped 17%. While stronger than expected commercial revenues, especially in the U.S., reflect positively on AIP. Palantir's current growth rate and 2024 growth outlook of 20% year over year is nothing extraordinary. Despite a decent Q4 showing, Palantir stock looks significantly overvalued, with potential downside of 33% to fair value. So, I want to show you that here at the top. So we're going to come back to that at the end of this video and address that, okay? So, let's start going through the numbers. Let's go. Here we go. So, first off, Palantir, you always want to look at, you know, do they beat or miss analyst estimates, top line, bottom line? You know, that's always the first thing you got to look at whenever a company reports, right? And when it comes to Palantir, they meet and they beat. So they met in terms of the EPS, but they did beat in terms of revenue. Was it an incredible beat? No. Was it a shocking beat? Like, oh my gosh, this is insane? No. But it was a beat nonetheless, okay? So they meet and beat. Now, when it came to their income statement here, here's the deal. Revenue grew to $608 million in this latest 3 months. That's versus at the same time last year, $508 million. So they brought in an extra $100 million of revenue just on a year-over-year basis. Cost of revenue hardly went up for the company, only up, what, $4.3 million there? That's like nothing. Gross profit exploded to $499 million. What this should tell you right here is basically for every extra dollar Palantir's bringing in revenue nowadays, so much more of that dollar is actually going to reach down the bottom line, because their gross profit is insane. I mean, it's incredible that their cost of revenue hardly goes up at all, but yet the revenue goes up $100 million year over year. It's ridiculous, okay? So gross profit, $499 million versus $404 million. Sales and marketing came in at $197 million versus $190 million same quarter last year. It doesn't come as a surprise to me at all. If you're going to be investing in the future, you need a sales and marketing team if you're going to continue to have your revenue fly up the way it is for Palantir right now. Now, here's something very strange I saw here. Okay, very strange. So research and development, they're up to $109 million they spent in this latest quarter versus $82 million in the previous quarter. Now, first off, R&D is a negative and a positive. Then the negative when it comes to R&D is, well, you're spending a bunch more money. You want to add a bunch more R&D folks, you're going to spend a bunch more money. The positive when it comes to R&D is, well, all those employees working on future technologies and softwares and things like that, well, those people should end up bringing you in a lot more money in the future, right? They're keeping you ahead of your competitors. So it's a positive and a negative. But something very strange here. So if you look at G&A, right, general administrative, that dropped to $127 million. So that's good compared to $149 million in the same quarter last year. So that's good. But it's very strange that you got a $22 million drop there, right? And if you add $22 million here, you're at $104 million in research and development, right? which means there's only an additional $5 million there. So what is this telling me? My hunch on this whole situation and why this is so strange is I believe what's going on here is I believe maybe there were some employees that were previously under the general administrative area that they moved up to research and development. Maybe they felt those employees were more research and development related employees versus general and administrative employees, okay? And so that's, I don't have any proof. I'm not an insider of the company. I'm not an executive. I'm not the CFO of Palantir, but that's what it smells like to me because it is a little strange that the movement in the numbers there. So I don't know. We'll see. That's what I kind of thought. Total operating expenses came in at $433 million versus $422 the same time last year. So this is only $11 million up number there. When you got your revenue up $100 million and your operating expenses only is up $11 million, you're doing things right, okay? Now, income from operations up to $65 million. That's versus $17 million operating loss in the same quarter last year. Interest income's up to $44.5 billion for the company, $44.5 million for the company now versus $12.7 million in the same quarter last year. Now, I like to run these two numbers together to kind of see the plus minus here, okay? So if you look at their loss from operations along with their interest income, they were negative $5 million, okay, in this same quarter last year. Versus now, if you take their interest income with their income from operations, you're at about a plus 110 number. So plus about 110 million. So we went from about negative 5 million in the same quarter last year to now plus 110. Whew, night and day difference for the company, right? If we look at the income before income taxes, $106 million versus $37 million in the same quarter last year, right? And that was really helped off this one-time kind of gain here for the company, so do keep that in mind. Net income from the company, $96 million versus $33 million in the same quarter last year. That's it. That's an A income statement right there. Very, very, very good. It's borderline A+, okay? Now, when we look at the balance sheet, there's something fascinating going on here, okay? First off, there are over $3.6 billion now in cash and cash equivalents and marketable securities for the company, right? That's versus at this same time last year, they were at about $2.6 billion in cash equivalents and marketable securities. So they're basically got that number up about $1 billion roughly on just a year-over-year basis. Now, current assets, $4.1 billion versus $746 million. We'll come back to that in just a moment. I thought that was big. Accounts receivables up to $364 million versus $258 million in the same quarter last year. So accounts receivables up, we can call it, what is that, $106 million year over year, roughly, there, right? Total equity in the company's up to over $3.5 billion versus $2.6 in the same quarter last year, right? But here's a big thing, okay? If you look at current assets, $4.1 billion for $746 million in current liabilities, right? So they're about $3.4 billion in the plus, which is ridiculous. Now, there's something in the stock market, it's a very important metric you got to understand. It's called current ratio. And if you have ever gone through any levels of accounting, I did 3 levels of accounting in college. If you go through even like the most basic levels of accounting, they're going to teach you about current ratio, current assets versus current liabilities, right? And if we run the numbers on Palantir here, Palantir's at over a 5, current assets versus current liabilities. So over a 5 on their current ratio, okay? Now, first off, if you don't know if that's great or bad, you got a lot to learn in regards to stock market. Right off the bat, you should know if a 5 is great, if a 1 is great, if a 2 is great, if a 7 is great, those sorts of things. If you don't know that, folks, you got a lot to learn, okay? Check out pinned comment down there. Apply to join my private group. I teach you all these sorts of things. This is like base level stuff. Like something like current ratio is like base level. Like if you don't know this, you got a long way to go in this game before you can really like sustainably grow your money over time, okay? Here's the deal, okay? If they're at over a 5 right now, the general kind of thinking is you're good if you're 1.2 to 2, okay? So if you're over a 5, you're like astronomically high. Like this basically means like the safety in your business model is like at a ridiculous scale. The safety in your balance sheet is like almost unparalleled. To give you some reference for this, Meta's got one of the greatest balance sheets in the world, literally, okay? If we look at the current ratio on Meta, for instance, it's under 3. And once again, this is one of the best balance sheet companies in the world, Meta. And Palantir's over 5. So Palantir's got nearly a 2x of the current ratio of Meta, which means if you look at the balance sheet wise, technically Palantir's a much safer business model to invest in than even a Meta. If you were just looking at the balance sheet and that's the only thing you had to judge these companies off of, which is insane to think, okay? So the moral of the story is Palantir's balance sheet is almost unparalleled out there, and they got one of the highest current ratios you'll ever see. That is unbelievable, okay? Now, next up here, I thought the lady on CNBC misspoke when I first heard this number, okay? She said U.S. commercial revenue grew 70% year over year. I said, what? Huh? No, that can't be right. Like, that sounds ridiculous. But yes, she was right. U.S. commercial revenue grew 70% year over year. Commercial revenue grew 32% year over year in general. Revenue grew 20% year over year. They closed 103 deals that were valued at over $1 million each. U.S. commercial customer count grew 55% year over year. That's huge. That's something a lot of shareholders have wanted to see. They want to see Palantir starting to grow customers substantially, putting up 40, 50, 60%, 70% type, additions in terms of percent year over year in terms of how many customers they're gathering there. That's phenomenal. Adjusted free cash flow, $305 million. It's a 50% margin. Fourth consecutive quarter of GAAP operating profitability, 11% margin. They got a long way to go with that, by the way. Fifth consecutive quarter of GAAP profitability, generally accepted accounting principles. That's as good as it can get, 15% margin. GAAP EPS of 4 cents and adjusted EPS of 8 cents for the company, right? So now this is a company that quarter in and quarter out is profitable. The old days of, Palantir is just a money-burning company. They'll never make money. Like, that's what everybody was saying in 2022. That was a hater of Palantir stock, which there's a lot of haters of Palantir stock, right? A lot of people don't want to see people make money in Palantir. It's a big, popular retail stock, and so it attracts a lot of hate, very similar to Tesla and a few other stocks out there. And that was their thing in 2022. Palantir will never make money. They'll never make money. They're always going to burn money. Anybody that buys Palantir stocks is a fool, right? If you just understood the trends that were going on in the income statement, you saw, oh my gosh, they're getting closer, they're getting closer, they're getting closer. Like, the trend was, I think, pretty clear by the back half of the year in 2022 that Palantir was going to get to profitability. And once those profits started pouring in, it was going to start ramping quite considerably. And we're starting to see the very infant stages of this now at this point in time, right? If we look at full year highlights, so this was just a turning point year overall. I call this like a Tesla 2019 year, where 2019 was a huge turning point year for Tesla, where they really started to, have their vehicles ramp, started to improve the financials, the income statement in a massive way, and it changed Tesla forever. And I look at Palantir and I see a very similar phenomenon going on here, where I look out at Palantir and I'm like, dang, this reminds me a lot of Tesla in 2019 in terms of just being at that turning point, right? And getting really their bottom line in a great place, and not needing, the top line to be insane. But the main thing I want to draw to your attention here that I think is important to look at versus, quarter over quarter versus year over year is look at U.S., this is for the full year, U.S. commercial revenue grew 36%, but in the most recent quarter, it grew 70%. So we're talking nearly a double up there, which means there's a fundamental change that's going on for Palantir's business model for the better, and you have to account for that. And when you have a fundamental change in a business model, this changes everything forever in regards to how you're going to value that stock moving forward. When you have an epic reacceleration of growth in a very important category like this is for Palantir right here, okay? No, the AIP boot camps, they talked a lot about that in the conference call and the presentation, things like that, right? And I knew this was a game changer, probably a quarter ago, 2 quarters ago, when they gave specific examples of AIP boot camps taking, a day or two, and being able to get a customer up and rolling and seeing results within a day or two, right? Versus previously, it had been months. It had been like, we needed 6 months with a customer. That's a fundamental change in terms of the sales cycle for Palantir, right? Which means Palantir can move a lot faster, get a lot more deals closed, and build their business much more rapidly, right? So the AIP boot camps is as big as it gets for Palantir, which once again is a fundamental change in this business model, which I think is helping this number you're seeing in front of you right now, 70% year-over-year U.S. commercial revenue growth for the company. They added 55% more U.S. commercial customers year over year, right? And if you know my thesis on Palantir, there's two core reasons why I've always been invested, in Palantir over the past, year or two, right? And I've added my 5,000 plus shares. The two core reasons why I'm invested in Palantir are, one, I was convinced this company is going to become a insane cash flow machine, okay? Insane profit machine. It's going to be an ATM company. The second reason is the commercial business, right? And specifically U.S. commercial, and how big that business can be. And I see there being a day, not that far in the future, I'm talking just a few years from now, where this company is going to be bringing in multi-billion dollars in revenue just from U.S. commercial. I'm not talking about international commercial. I'm not talking government or any of that stuff, okay? And so, that's why I've been an investor of the stock for the last couple of years, and why I'm a huge believer of this one. Now, these are the two biggest slides, not just for that number, but look at the right here, okay? GAAP net income. Here's the deal. They went from $123 million GAAP net loss in Q3 2022 to now $93 million in the plus GAAP net income in this most recent quarter, right? What a change. What an incredible change. And that's over a $200 million flip in just over a year. Insane, okay? This is another big story for me, in my opinion. This is GAAP operating income loss. So when Palantir started to actually, get to a place where they looked like they were going to flip as far as the bottom line, people said, well, you're still taking huge operating losses. You'll never get to an operating income. You're only being helped by treasuries because those are yielding a bunch. Well, that story's changed, and the bears can't even go off that anymore. Because now we look at the GAAP operating loss in income, right? So GAAP operating loss back in Q3 2022 was $62 million. This most recent quarter, Q4 2023, $65 million in the plus. So now the bears don't even have that to go off of. They used to have the net loss to go off of. They lost that. Then they said, okay, operating loss. You never make operating income. Then they lost that starting in Q1, right? And so and now that's ramping fast. I mean, look at that. Q1, $4 million operating income. Now they're already up to $65 million. And that's all in the same year. So the bears are just losing everything in regards to Palantir at this point in time. And this is something that's going to, if you're thinking about the stock price, going to help the stock price immensely, because it's just, you're not going to have much to say. And we'll speak about valuation in just a moment. The last thing the bears have to cling on to in regards to Palantir here is valuation. And we'll speak about that in a moment and what's actually going on with their valuation, okay? No, government revenue is a weak spot for the company, right? So if you look at this is a big holdback. So the company, total revenue growth, 20% year over year here, right? But it's really being held back because U.S. government is insanely slow right now, only 6% growth there. If we look at total government revenue, only 11% up year over year. It's just the government business is slow as molasses right now, okay? And so that is what it is. It won't be like that forever, but it is like that right now, okay? That will eventually turn. That's going to come around. I have no doubts about the government business long term, okay? I understand, it's a short-term problem, but at the end of the day, the government loves to spend money. It's the way it's always been. It's the way it always will be. And so the whole government business, I'm looking at it, I'm like, yeah, it's not the exciting time for the government business for Palantir. I'm 0% worried about that. That will come back. Growth rates will accelerate in the future, and that will be that, okay? Government is addicted to spending, okay? I mean, that's like having a girlfriend in Beverly Hills and not expecting her to spend, okay? She's going to spend. That's the U.S. government, okay? Alrighty, average trailing 12-month revenue per the top 20 customers is now $55 million. Billings might be the most underrated number when it comes to Palantir here, okay? And in terms of their billings, that was up 56% year over year from $387 million to $605 million in this most recent quarter. That's insane. If we look at the adjusted gross margin of the company, 82% at this time last year, now up to 84%. The margins are incredible, which is just another, proof point of, massive profitability coming down the line here for Palantir. U.S. commercial customer count, 55% year over year. But if we look at commercial customer count in general, 44%. So what should that tell you? When you're looking at a company's reports, you should see certain numbers, and something should stick out to you and be like that means something, okay? If U.S. commercial is growing at 55%, but commercial overall is growing at 44%, right? That should tell you that something's off here, okay? And what that tells you is the international business is not there for Palantir in terms of the commercial side. It's not nearly as enticing or exciting as U.S. commercial. U.S. companies realize that they have to utilize products like a Palantir. International companies just aren't moving as fast, which is why they're going to get left behind again. International companies keep getting left behind again and again and again behind U.S. companies. U.S. companies keep, their dominance keeps growing bigger and bigger and bigger. And now all the most dominant companies in the world are all United States companies. And the margin between them and European companies and basically every other country's companies is getting wider and wider and wider and wider. And you got to ask yourself, why is this happening? And it's because U.S. companies, they have to move so fast because they have so much competition. And so they have to adapt new technologies. And if there's a move here, they got to adapt that right away. European companies are just so slow moving, and that's why they're getting lapped again and again and again, right? And so it's a moral of the story. If European companies were smart, they would be jumping on Palantir's bandwagon right now and being like, we got to utilize this. Instead, they're going to get passed up by their counterparts in the U.S., and they're going to get outcompeted again, as it's been the same story for the last, decades. And it's just like, you got to move fast. You don't move fast, you will be left behind in this game, right? It's a very simple game. Now, this is a big slide I thought here. 103 deals of at least $1 million for Palantir in this latest quarter. 37 deals were at least $5 million, and 21 deals were at least $10 million. At least $10 million, right? This is Palantir. This is the big dog, right? They're going after big companies. That's Palantir's name of the game. Now, I thought this might be one of the most overlooked things out there for Palantir, okay? Cash from operations and adjusted free cash flow, they show here, okay? But this one's specific. Cash from operations. In this same quarter last year, they were $79 million, about a 15% margin. And look at what's happened in just a year, right? Now to 50% margins and $301 million of cash from operations in just a year-over-year basis, folks. I mean, that's incredible. Imagine where Palantir is going to be 5 years from now. Imagine where they're going to be 3 years from now, 7 years from now. If they made up that much ground in a 12-month span, what can they do over the next 5 years, the next 36 months? I mean, it's just ridiculous. So the moral of the story is Palantir is headed in the right direction and quickly here, okay? Now, in terms of their guide, it's very interesting because their revenue guidance for 2024 is basically roughly right in line with what analysts are expecting. By the way, I thought this was huge. GAAP operating income and net income in each quarter this year. So anybody that was thinking could Palantir start taking losses again? No, Palantir threw that right out and they're like, dude, we're good from here, okay? We're profit from here on out, okay? But I looked at this number and I thought, okay, is this a real number or is this a sandbag number? And I tell you guys, what is the game of Wall Street, okay? The game of Wall Street is a game where you have to set up your numbers, where you can come in and beat those numbers and beat analyst expectations. And if you can consistently come in and beat analyst expectations when it comes to revenue and earnings per share, you start to get a bigger premium on the stock. You start to be respected more as a company. And your shareholders really appreciate you because they know that company's coming in beaten. No one wants to be in a company that comes in and misses, okay? So when I looked at Palantir's revenue guide, I said, okay, maybe it's real. Maybe that's what they actually expect. Or maybe they're just sandbagging a little bit and say, let's come in exactly kind of what analysts are expecting here. And then throughout the year, we'll just report, a little better numbers throughout the year than what analysts are expecting. I don't know. We'll never know. We can't be in the room with them. We'll never know the answer to that question. We'll never know the truth because they would say one thing and, it doesn't mean it's the truth, right? So, I don't know. I did think that was interesting that the guide was basically identical with where analysts are at for 2024. That makes me feel more like it's more of a sandbag. The fact that it basically came in exactly where analysts are at made me feel like it was a little bit of a sandbag. If it was $100 million under where analysts were at, I would say, okay, that's probably real. Wow, they're expecting maybe some weakness. Or even if it was $50 million, $100 million more than where analysts were at, I'd say, okay, that's probably a real number. Right at analyst numbers? Come on. And we know that analysts are almost never right. That seems strange, okay? Now, in terms of the conference call, Karp was cocky, Karp was confident. We like a cocky and confident Karp, right? And that's exactly how he was on that conference call. No doubt about it. He was, It was carp. It was carp, right? And it was hilarious. We were on that Twitch live stream. Dan Ives popped on his face on there for a minute, and people in the chat thought Dan Ives was on the toilet, because it did kind of look like he popped up his video, and it kind of looked like he might be sitting on the toilet. It was a little suspect. Let's just put it that way. So that was kind of hilarious in regards to conference calls. That's why you got to join those live streams, man. Some funny stuff happens on them sometimes. So, I'm sitting on 5,555 shares in the public account going in this. I got shares in other portfolios as well. And so based upon just a public account move, based upon the move after hours, that's about $16,000. We're up after hours, which feels like nothing. It really does. It really does. And you know what screwed me is last week, Meta, right? Meta reported that earnings, and I was up $150,000. On that, right? So the dopamine hit from that was insane. Like $150,000 in your net worth up on just a few hour basis. Like that's a huge dopamine hit. So then Palantir is like, it's having a great after hours, and we're up like $16,000 after hours, but it just doesn't feel the same, right? That dopamine level in your brain just didn't quite get hit the same way it got hit last week, right? And so that's just funny. And you think about it, right? I was excited about the $150,000 up for Meta after hours, but you look at like Zuckerberg, for instance, and Zuckerberg, I mean, he was up, tens of billions of dollars, right? And so $150,000, he wouldn't even notice that. Like, yeah, that could go missing, and he wouldn't even know. Like $150,000 went missing. I had no clue. So that's the moral of that story, okay? Now, when it comes to the stock, and is a stock overvalued, undervalued, is it a buy, not a buy, those sorts of things, okay? In order to understand a subject like this, you have to know how to value companies. And you look at a stock like a Palantir, right? This stock trades at a forward P of a little under 60. That's if this number is correct, which it might be a little low, but let's just say that's correct, okay? So they're trading about 3 times the market roughly, okay? We can call it about 3x the market. Now, revenue growth for an average stock out there, you usually know is somewhere in the 3 to 6% range, right? Well, Palantir's grown revenues about 20% clip, roughly, right? So Palantir's growing at, let's call it anywhere from 3.5 times to maybe, 6.5 times the market. So the moral of this story here is Palantir should be at about a 3x multiple on the market, considering it's growing at probably 3.5 times to 6.5 times an average stock. But we could take it one step further and we say, well, what's the business that really matters for Palantir over this next decade? And how's that growing? The business that matters by far and away the most for Palantir's business model is U.S. commercial. That's the granddaddy of them all. If we're looking 5 years out in the future, 10 years out in the future, that's going to be it's going to dwarf every other business. It's going to dwarf the international segment. It's going to dwarf the government business and those sorts of things, right? So their business is growing at 70%, which is well over a 10x of where the market's trading at. So when I look at a Palantir, I think the more you dig into it, the more you're like, oh, this stock isn't trading actually that rich. Although it looks on surface value like, wow, 57 forward P. When you really run the numbers and the math versus where the market trades at and those stocks trade at, it actually might be cheap here. Cheap. And also remember, Palantir is at the infant stage of profitability. So the moral of this story is that number might be way low for 2024. They might be way ahead of that number this year. Way ahead of it. And people got to consider that as well. So when you look at the stock and you see 57, it might actually right now be at a 47 or 40 or 45. And once again, that would only be about 2 to 2.5 times an average stock out there with way bigger growth rates over this next 5-10 years than an average stock, right? So that's something to consider. So we take it back to where we started this video, roughly, was around this. And I'll ask you guys, open it up for you guys. Is this guy wrong or is he right in terms of the unwarranted pop after hours? Love to hear from you guys in that comment section, okay? Now, if you missed last night's video, that's a beast. So far, 35,000 people have gotten to see that one. 6 stocks I'm buying now. That's an animal of a video. Holy smokers, that was no joke, okay? Listen, if you've been gambling in the market, you don't understand a lot of this stuff, how to value stocks, income statements, balance sheet. If you don't understand a lot of this stuff, pin comment down there, apply to join my private stock group. I have courses that go all into this, teach you all this stuff, so you're not lost when I'm going through these slides like I just did there, okay? Appreciate y'all joining me as always. Much love and have a great day. Go Palantir!